Don't buy this stock until you watch this analysis. We're going to see whether right now is the perfect time to buy the stock. First, we're going to see if the business behind the stock is any good. We'll look at 5 metrics and grade them from 0 to 10. In order, the PE ratio deals with the amount of speculation surrounding the business. If it's too high, it means too many investors are speculating on the price and overvaluing it relative to how much it earns. As low as possible is ideal. Earnings growth accounts for the next 5 years the business is slated to grow. High growth means the company is still innovating. Ideally, we want high growth, but that usually comes with a high PE ratio. Profit margins tell us how efficient the business is at keeping what it makes. We also want this to be high. A high margin business is assurance that the business has pricing power and a brand name behind it, which builds out its economic moat. Return on equity goes hand in hand with profit margins. It tells us how well the company is using its money. We want a high ROE. This fuels higher profit margins, which increases growth. Then there's the return on investment. It tells us how well effectively money is being used to generate more money over time. We want a high ROI. The compounding nature of a high ROI further pushes the intrinsic value of the business. When we put these 5 business metrics together, we can answer the question whether the business is any good. A score of 0 means a failed business, and a 10 makes it a 1 in a million business. If you consider the business important in your analysis, this should answer your question. This is just one of hundreds of other companies I've graded. If you want access to that spreadsheet, which is updated all the time, join my Patreon. Go to patreon.com/GrowthShares or click on the link in the description. Next, should you buy the stock right now, independent of the business? We all have different investment time horizons, so I split these based on how long you plan to hold the stock. A short-term investor will look for a low relative strength index, ideally below 30. The holding period of short-term investors are often less than a month. A near-term investor will look for a negative 50-day simple moving average, ideally as far negative as possible. The holding period for a near-term investor are often less than 1 year. A long-term investor will not only consider the business but also look for a negative 200-day simple moving average, ideally a very low number. The holding period for long-term investors are more than a year, sometimes pushing multiple years. Lastly, if you want absolute value, you can average out all 3 value scores. This will ensure you're getting the optimal current price for your investment as of this video. Remember, if you want to stay ahead of the competition, join my Patreon to get access to hundreds of stocks. If you found this analysis insightful, subscribe for more. Invest wisely, and as always, take care of your money.